Warren Buffett is one of the wealthiest people on earth and built his wealth through investing in the stock market. Investing can widen your earning potential significantly. This earning potential can improve your standard of living, allowing you to go on more holidays, buy a second home, or fund your children's education. Quality businesses. Investors purchase assets like stocks and investment funds that they anticipate will generate a profit. Investors constantly consider the future since they either anticipate receiving a fixed income or want to recoup their initial investment when they sell their assets. Generally, Buffett's approach to investing is based on intrinsic value. As a value investor, he seeks to make investments in businesses that, in addition to having solid profitability, attractive valuation measures, and a clear path toward future growth, are cheap in comparison to their rivals. In contrast, the majority of investors don't research the companies they invest in. They merely focus on the logos or brands of powerful business organizations. When selecting a stock, Buffett suggests that you research the goods offered, overall sales, competition, consistency, the strength of the competition, and more. Invest as though you are purchasing the entire business, not just small shares. Be fearful when others are greedy. Be fearful when others are greedy, and greedy when others are fearful is one of Buffett's most well-known quotes. This sentiment is really applicable to the stock market and investing process. The main message is that since the stocks that everyone else is purchasing are likely to be overvalued, you should steer clear of them. Instead, search for undervalued stocks, analyze their fundamentals, and consider investing if it makes sense. Buffett determines the intrinsic value by examining the company's fundamentals over the past 5 years, if not more. He pays close attention to operating margins, returns on equity, and having little to no debt. He assesses the company's valuation by comparing it to that of its peer group. Finding businesses with some kind of monopoly or unique quality that will help them succeed in the future is an important component of this. Cash is king. Investors must be prepared to seize opportunities for once-in-a-decade investments. That entails making substantial strategic investments as opposed to modest ones. Throughout Buffett's tenure as an investor, a single investment has occasionally made up more than one-third of his portfolio. Maintaining a cash reserve can help investors get ready for these opportunities, especially when the market is performing well. Buffett utilizes these cash reserves to be an activist investor. As an investor, Buffett invests heavily in troubled businesses. The aim is to purchase shares to compel significant changes in business practices, frequently in management. Buy and hold. Buffett emphasizes the value of patience in all of his investment guidance. Buffett believes that waiting for possibilities to present themselves is far preferable to pursuing assets that aren't quite as good as you want them to be. Part of being patient is buying and holding your investments. Buffett has maintained this stance for a very long time and frequently reminds his supporters of this. He even admitted that he prefers to buy and hold forever. This is accurate because he has held on to several of his positions for more than 20 years, which is an eternity in the investing world. He has clarified that this does not mean you should hold on to a company if its fundamentals have altered. Buffett continuously monitors his holdings, and if a firm starts to lose its competitive advantage or dominance, he will sell or reduce his position. Long-term investment ultimately depends more on patience, perseverance, and a willingness to explore opportunities where other investors have not. Do your own research. Avoid making investments based on stock recommendations or tips. Do independent research. This includes analyzing thousands of stocks. Once you've selected the ideal stock, wait until the share is offered at a significant discount. The secret to successful investing is selecting the right stock at the appropriate price. According to rumors, Buffett has a list of hundreds of businesses he wants to invest in, but he is holding off until the proper time and price come along. When stock prices plummeted during the Great Recession, he went on a buying binge. He was able to seize opportunities and lock down pricing that enabled him to earn excellent returns in the years that followed. Finding the ideal time to invest by analyzing thousands of stocks is extremely challenging for an individual investor. You can hire a wealth manager or a financial advisor to manage your portfolio on your behalf. However, you must be conscious that you are selecting a qualified and customer-focused specialist. Do not always diversify. Diversification is often cited as a wise strategy for market investments. Spreading your money across a variety of investments and investment types is the essence of diversification. The notion is that if one specific asset or a group of assets lose money, your portfolio will still be protected. Warren Buffett frequently rejects the notion of diversification. Long-term equities should be chosen by seasoned investors, and they should have faith in their investments. Some investors diversify their portfolios because they are concerned that one stock could cause their entire portfolio to lose value. Yet, doing so makes it far more difficult to maintain attention on certain stocks. By diversifying, they may lower the volatility of their portfolio, but also lessen their emphasis on specific investments. Index funds. An index fund is a mutual fund or exchange-traded fund with a portfolio built to replicate or follow the components of a financial market index. An index fund is considered to offer low operating costs, broad market exposure, and minimal portfolio turnover. These funds remain at their benchmark index no matter how the markets are doing. Instead of actively selecting specific stocks, indexing entails developing a portfolio mimicking a specific index securities. Buffett is aware that identifying investment opportunities that others have passed over requires time, which most amateur investors either cannot or do not want to put in. He advises those investors to put their money into index funds. Buffett thinks that these low-cost funds are effective at capturing the long-term gain of the stock market while minimizing costs and short-term trading. Buffett recommends that the majority of the organizations to which he makes donations should invest their cash in low-cost S&P 500 index funds. Buffett has specifically suggested that the older generation with significant savings should utilize index funds. Monitor your portfolio. Once you start investing, remember it's a continuous process, so you must periodically review your investments, personal circumstances, timeframes, and risk tolerances, as these will change with time. For example, as you get closer to your goal, you may want to reduce your exposure to riskier investments to try and secure your capital. In addition to assessing your risk tolerance, check your portfolio's risk profile. As different top investment funds change in value, they will adjust their weighting in your portfolio, affecting your portfolio's overall risk profile. Periodic rebalancing of your portfolio can readjust this back to the desired level. The path to achieving investing success is not always straightforward and can be blocked by uncontrollable external circumstances. However, regularly monitoring your portfolio helps reduce the impact of these situations. It helps you keep track of those investments that are not generating growth, enabling you to sell these holdings and swap them for something more lucrative. This guarantees that your stock portfolio will continue to grow. One of the greatest investors of all time, Warren Buffett, has been open about his investment approach for the majority of the 50 years as he led Berkshire Hathaway. His investment advice emphasizes the value of being patient, putting value first, and going all in when opportunities present themselves.